Hi there, Stan the Annuity Man, America's annuity agent licensed in all 50 states and Puerto Rico. Today's topic is a weird one. What is a participation rate in an annuity? I'm assuming the question is about indexed annuities, which is where a participation rate index option can be found. We're going to talk about that. You're probably not going to get the answer that you're expecting, but it's going to be the truth, so I would advise you to hang in there after this. So participation rate in an annuity, in this case, I think it's what you're probably asking, indexed annuity. Indexed annuities were put on the planet in 1995 to compete with CD returns. Since that time, in the biggest raging bull market of all time, it has produced CD-type returns. Not market returns. Not what you hear at the expensive steak dinner seminar or some fraudulent pitched thing you see on the internet. Market upside with no downside. Market participation with principal protection. 8, 10, 11, 12, 17. Come on, man. Returns. Come on. It's not. Participation rate is one of the limiting levers, caps, spreads, participation rates within an indexed annuity. It's a limiting part, okay? Now, people say, what if it says 100% participation rate, Stan? Well, what if it says that? Well, remember, with most index annuities, you can only lock in the gain 1 day per year. The other 364, you're what I call an annuity eunuch. E-U-N-I-C-H, if you want to pull it up. That's what you are. You can't do a darn thing, okay? There are some longer-term index options that allow you to lock in during that longer-term time period, but boy, are we getting down a rabbit hole now. What I want to tell you is that you're looking at participation rates, you're looking at the wrong thing. If you're looking for market growth attached to a participation rate, you're looking for the wrong thing. If you're thinking that participation rate can give you your cake and eat it too, you're getting ready to sign the paperwork and get taken for a ride. We have no problem with index annuities. We use them as a delivery system for the income rider guarantee that's contractual for future lifetime income. That's how we use them. We don't use them as a standalone. We just don't. Why? Because the annuity companies can typically and historically change the rules at their discretion. So you might have a really large participation rate, okay, the first year, second year is low. They get to change that at their discretion. It is not a market product. It is not a security. It is not a replacement for stocks, bonds, mutual funds. If you want to get market growth, go get market growth. I do not care what Johnny Appleseed agent showed you as non-guaranteed return scenarios. Well, if you'd owned it 10 years ago, you'd have gotten this. If you owned it, the participation then was great. 10 years ago, come on. Potential, hypothetical, theoretical, unicorns chasing the butterflies don't pay the bills. If you're looking for principal protection and a good return that's contractual, then do a multi-year guarantee annuity. MIGA. It's the annuity industry's version of a CD. Annuity industry put out 2 CD-type products. Indexed annuities in 1995 and MIGAs forever. They've been here forever. One's a CD product that has a guaranteed interest rate return, MIGAs. The other's a CD product without a guaranteed return. Which one do you want? Listen, if you're still in dream world and upside world and let's hit a home run world, then don't buy an annuity of any type. That's including variables and RILAs, which I don't sell and never will, and indexed annuities, which I sell, but not like you think I do, income riders attached for lifetime income. What's the participation rate of an annuity? If you're asking that question, you're probably thinking market returns. If you're thinking market returns, then don't buy annuities. Annuities solve for 4 things. The acronym that I came up with that works, and that is the truth, is PIL. P stands for principal protection, I stands for income for life, L stands for legacy, the other L stands for long-term care. There's no G for growth, there's no M for market, there's no B for Bitcoin, there's no N for NVIDIA, okay? You don't buy dreams with annuities because you're going to own the contractual realities. So participation rates are part of that dream sales pitch. Caps and spreads upfront bonuses, which is candy for the stupid. 100 pennies in the dollar. There's not an additional 20 cents over here for the bonus. 100 pennies in the dollar, player. So I know what that jackwagon didn't even go into the details of a participation rate. It's because it's a waste of time. If you're buying it for that, you're buying the wrong product. In fact, if you're buying it for that, you shouldn't even be buying a product. You should be buying the markets where you have unlimited upside. Unlimited. I know there's people, well, this one says 104% participation rate. That's what he said right here, son. Again, 1 day per year, you get to lock it in. The other 364, you're an annuity eunuch. I had a guy call me the other day, and with indexed annuities, those indexes, okay, and I think there's 50 to 60 they're using. You're thinking, Stan, wait a minute, I don't think there's that many indexes out there. There's not. They make them up out of thin air. Okay, so my favorite is they'll make up like the XYZ duplicator index. You know, I've never heard of that. Well, that's because it hadn't existed until 3 months ago, and then Johnny Appleseed agent says, well, if you'd owned it 10 years ago, hey, wait a minute, Johnny, it's only been on the planet for 3 months. How do we do a 10-year back test? How do we do that? It should be illegal. What I was saying is all of these indices do not include dividends. And you're saying, wait a minute, Stan, what's that got to do with the price of eggs in Texas? Well, I'll tell you what it has to do with, Ernie. S&P 500, over 50% of the returns are dividend-based. If you want S&P returns, go buy the S&P 500 at Vanguard, or Fidelity, or Schwab, or whoever. I don't have any skin in the game with these people. The point is, go buy the S&P 500. You don't need an indexed annuity to limit your returns on the S&P 500. Well, I could lose money on the S&P 500. Yeah, but you also gain. If you're thinking like that, then your portfolio is not in proportion and allocated properly. If an indexed annuity is in your portfolio for market growth, you've made a mistake. If an indexed annuity is in your portfolio with the participation rate for CD-type returns that are not guaranteed, then great. My question to you then is, why wouldn't you just buy the CD with the guaranteed return? Stop hoping and dreaming. Stop trying to thread the needle. Stop trying to throw the dart at it. Stop trying to be smarter than your neighbor, because you're not. I had a guy call me the other day and he goes, Stan, I need you to really, I watch your videos. I need you to really explain this index annuity. It's new to me. It's new to me, son. It sounds great. I'm like, Fred, it's been around since 1995. What rock have you been under? Because if you go into any bank or any brokerage firm or eat at any steakhouse, someone's going to try to sell you indexed annuity. And there's actually indexed annuity companies out there now that are multi-level marketing companies that sell indexed annuities. Spoiler alert, all annuity commissions are built in and hidden from the client. Guess which one's the highest? Huh? Yeah. Don't make it bad. Don't make it bad, because we sell them for the income rider guarantee as a delivery system. Someone said, why do you do that if you don't like them all the time? I'm like, because we can't just buy an income rider as a standalone product. It has to ride on top of the policy. And with indexed annuities, you can attach riders to RILAs and variable annuities and indexed annuities. And we've historically found that indexed annuity income rider guarantees are the highest contractual. Because what I always say, A plus or the number, A plus and the number, A plus and the number, quote all carriers, A plus or better, or and the highest number. That's it, not or, and. A plus and the highest contractual guaranteed number. So I would encourage you to go to my site, download the Indexed Annuity Owner's Manual. I go through all of this participation rate, cap spread crap that you're wasting time on. Okay? Run quotes, watch the videos, etc. And above my head, spinning clock, is about a video I did called Why People Still Hate Annuities. And why people still hate annuities, a lot of it revolves around this product's sales pitch. It needs to be cleaned up. It needs to, I'm not going to say regulated, because boy, that's scary. But it needs to be cleaned up. I'm just going to tell you, if it sounds too good to be true, it is every single time. If you nudge your spouse at the steak dinner and say, that sounds fantastic, I cannot believe that product exists, it doesn't. You're getting ready to be the sucker at the table. All right? Be careful out there. Get in contact with me, stan@theannuityman.com. Let me tell you the truth about this stuff so you can make a good decision on your terms and on your time frame. All right? Thanks for hanging in there with me. See you next time.